All right, guys, we have about 200 to 205 days left for the Bitcoin halving. I've went ahead and actually marked all of the prior iterations of the halving from the bear market until the halving has taken place, and we're going to be discussing where are the key target areas we should be at by May, which is when the halving will occur. We're going to talk about the shorter time frames for Bitcoin and the Dixie and what's been basically taking place there. We're going to talk about the Zen chart, so stick around till the end of the video. You don't want to basically miss this information, guys. If you enjoyed this content, definitely give it a thumbs up. We're almost at 6,000 subscribers. I appreciate each and one of you for basically supporting this channel. So let's go ahead and get started into the video, guys. So as you can see, I went ahead and plotted out on the Bitstamp 5-day chart all the 3 iterations of the Bitcoin halving that have basically taken place, and you can see I've marked them from the bear market lows all the way till when the actual halving event takes place. So with that being said, the first iteration we saw was roughly around the bottom of that cycle. We don't have any prior information before 2011, but this chart will basically do. So with that being said, the lowest point was during 2011 leading into the halving event, which was around November of 2012. That brought you about 446% upside. From here, the next market bottom cycle was roughly around 2015, which basically led into the halving in June of 2016. That brought you roughly about 393%. And then you had your third halving event, which basically was marked from the bottom bear market of 2018 all the way to, again, the start of that bull market of 2020, the halving event, which basically brought you about 216%. So averaging these 3 iterations in the data set, it basically gives you a mean of 351% and a standard deviation of 252%. Now, if we were to take our standard deviation, the first standard deviation of 252%, that basically puts you roughly around the $56,000 to $57,000 area, which kind of confluences with the resistance of the previous bull market highs from here. Now, keep in mind, guys, if Bitcoin essentially comes to this area, there could be a scenario where we could be facing a triple top situation. Now, usually those don't happen on the 5-day time frame. They're very rare, specifically even in traditional markets. But again, anything is possible in regards to that. But say to speak, if we were to take the mean average of this of 351%, that basically puts you roughly around, I would say, let's say 350%. That puts you roughly around, we'll say about $70,000, guys. So that's basically, those are the numbers you're looking at in terms of that. So that's to per se leading into the next halving event in 2024 of May. Now, keep in mind, guys, this actually changes depending on the blocks, again, and depending on how many transactions and things like that. So this could be extended a lot further away from May, or even be a lot shorter. But just expectation wise, this is basically what we're looking at. So shorter time frames, what we're looking at in terms of the comparing it with the Dixie chart in particular, again, with Bitcoin on the daily time frame, we're actually seeing here we were putting in lower high on the oscillator on the stochastic, while on price action we were basically putting in higher low, and this basically indicates to you a trend change in direction, which basically led us to roughly about $36,000, which is where we're currently getting rejected at. Now, I do want to move your attention away from the charts for a second, and we can see that the FOMC meeting is roughly going to be happening about 8 days almost, which there is a high probability of 99% chance that there won't be any rate hike and that the rates will stay basically stagnant. Now, if Jerome Powell essentially keeps rates the way they are, then the more likely scenario for Bitcoin here would be that again, there's still more continuation to the upside, and that the Dixie could basically be pulling back all the way to the 104 area on the chart that you see here. So could basically start that downward trend that, you know, we were looking for the past week or so. But again, if Jerome Powell for some odd reason comes out and basically raises rates by 0.25, then the more likely scenario, then we're going to be retesting the resistance of 107 for Dixie, and then more likely we're looking for a pullback for Bitcoin roughly around the $31,000 to $32,000 area from there. But again, there's a high probability that, you know, there won't be any rate hike based off of the FOMC data. With that being said, I do want to move your attention quickly back into the higher time frame for Bitcoin real quick here. And I'm just going to remove the data set drawings here, and we can see that on the 5-day time frame we do have the 200 EMA actually acting as resistance, as you can see here, which is basically sitting roughly around the 35,200 area, guys. Now I want you to keep in mind the last time this acted as a resistance was roughly around the 2015 area, and that basically pulled Bitcoin back all the way roughly about 36%. So it went from $322 all the way down to roughly, you know, 198, so below $200. Now if that was to take place, you know, what are the targets that you're actually looking at for Bitcoin here? The more likely targets you're looking at, if you were to have a 36% again drop, you're looking at around $22,000, which there is a bit of a support confluence again in this area, guys, for, you know, the buyers to basically try to maintain this area here. So that's basically what is happening on the higher time frames leading into the halving. Now keep in mind, anything can happen leading into halving. We could have basically a pullback, and then we could try to meet those numbers that we were talking about. But again, that's such a short distance. You know, you have roughly, what is it, you know, 200 days into that, guys, to, you know, look at these statistical numbers as, you know, the main averages for them. So again, let's go ahead and discuss a little bit about Zen and what's been happening there, because Zen did face resistance at our key target areas we were discussing. Again, we were looking at this zone of the 700 price point to 800, around there, which you can see there is a bit of a resistance coming in all the way from August leading into, yeah, the end of August to all the way from March of the last previous, you know, nice highs that we actually put in here from about 1500%. But with that being said, so far, what I would like to see on the shorter time frame, particularly on the 4 hourly, is that I don't want to see Zen really close below the 600 price point, because if that's the case, then the more likely scenario, it seems that there is still a lot of weakness from the minters, that they're continuing to basically sell off their mints, and that this particular rally more likely has ended. Now, the only thing that I think that can keep this rally you know, continuing on forward would be basically for the gas prices to continue on up. We've seen on average, guys, that the, you know, gas prices have been at a very low levels, guys, very low levels overall. I've even posted it on, again, guys, if you follow me on Twitter, I went ahead and actually posted this Ethereum average gas price. You can see we are historically at low GUI levels. And with that being said, if we do see an upshot in GUI, then more likely this can support this, you know, upside movement we've been seeing in Zen. Because in that case, you know, the minting will be more, again, more expensive. More likely people will buy Zen off of the market than actually minting and waiting for it to, you know, come through and you can actually sell it from there. It would be a lot better to basically speculate by buying it. But again, I wouldn't be buying in this case. I was buying at low levels. I was minting at low levels, at historic low levels in terms of the gas prices. But what I'm particularly saying is I want Zen, again, to stay above the 600 percentile. We do see we did have an actual closure below it. However, the buyers came in and try to push us above the 21 EMA on the 4 hourly. So far, again, we can see on the stochastic as well too, we did have a chance to go above, but you see these are very high numbers in terms of the stochastic overextended, so you are more likely to receive a retracement more than anything else at this point. So again, yeah, guys, nice structure. If we can maintain it, you know, above the 600 price point, I think we should be fine. Other than that, I hope you enjoyed this video. If you did, give it a thumbs up. Until next time, bros, as always, stay profitable.